The market is crashing, and I don't think it's over, actually. I think it's just getting started. And so I want to point out why I think that, because I'm studying some of the past performance, and I want to alert you to some things that you may be able to do to protect yourself or to actually make some money on this market. So stay tuned. We're going to get into why this market is a shortable market. It's a beginning of a bear market, and you got to be really careful. Here we go. I mean, I could be wrong, by the way. And so don't act on anything that I say. Just, learn from this and see if there's anything that resonates with you. And if it does, then maybe you want to do something, but that's up to you. This is not financial advice. This is more education. So that's, I got that out of the way. Also, I'm going to be using charts from what's called Market Surge from Investors Business Daily. They're great. I don't make any money if you go get them. But that's what I'm using, and they're awesome. And this is for educational purposes, so let's see what happens. What I'm showing you on your screen is 2009, okay? So that's the last date over here in 2009. Ignore this relative strength rating line. It's not applicable to some of these indexes, but it is applicable later on when I show you a bunch of stocks that you can make money on the downside in a bear market. So let's go. This is 2009, and so you could see here in 2007, things started to go downwards. Now, I want to point out what is called a death cross, and that is when the 50-day moving average crosses down to the 200-day moving average. Since I'm looking at a weekly chart, it's the 10-week moving average, which is roughly the same as the 50-day moving average, and the 200-day moving average is similar to the 10-week. So the 10-week is this black line, and the 10-week is the red line, and the 40-week is the black line. Okay, so the 40-week is like the 200-day moving average. So if I didn't say that right, that's the bottom line. Is the longer moving average is the black one. That's a 40-week moving average is roughly the same as a 200-day. Okay, when the 200-day is crossed downward by the 50-day, or the 10-week crosses downward through the 40-week, that's what this is called here. This is a death cross, all right? So you got to keep an eye on the death cross. Now, I want to show you, look at this. The opposite of a death cross is a golden cross. So look at what happens after the golden cross. We went from 90, it kind of crossed here a little bit, but it didn't really do much severe crossing. Like there's some skimming, just kind of skimming along the water here and maybe in here. But it wasn't like a severe cross like this one was a pretty severe cross, and obviously got confirmed a couple of weeks later. And then the volume starts to increase. So looking at the volume, you see 45%, 49%. It's now on a downward trajectory. That's a hard word to say. Trajectory, right? That's like judicial system. Hard to say, especially if you've had a drink. So, but looking at it, we've got a death cross here. Well, that's pretty benign. Just having a little cross doesn't seem like a big deal. But look at this. It went here at 148.60. And that's when it crossed down, and then it tried to come back and test the 200-day moving average or the 40-week moving average. Couldn't handle it and basically just broke down. Okay? So you got that in your mind, you got that pattern in your mind. I also want to show you some support patterns. So there's a little bit of support right in here. And so after this volume bar right here, which is, a high volume bar, the next one, I guess I should say, where it crosses below that support line, all hell breaks loose. And look, it can't even get back to that support line and hold it, right? And so I don't know, because I don't try to predict the markets. I try to prepare for the markets and use probabilities. But to me, I'm studying the past charts, and I'm going, well, there's a lot of stuff that we can learn from these past charts. That's 2009. I'm going to go back here, and I'll put in, this is the S&P 500, by the way. I'm going to put in 2003. And I want to show you that death cross. Look at that one right there. Okay? Yeah, there were other times it was kind of skimming along, but notice how soon as it went here and it had a break below this support. Now there was a little bit of support there. You could draw horizontal support here. You could do whatever you want. As soon as there was a break in there below the 50 and below the 200-day moving average, probably on this bar here, we got a big break to the downside. I mean, we went from this high here of 145 or 147, and we dropped all the way down to 80. And if you just paid attention to the death cross, you could have prevented it. Now let's go to today and see what's going on. All right, so here's today's market, and I don't know why it's not putting the moving averages. Let's try this again. There it is. Now we are right at the beginning with this death cross happening, right? The 50. Now, could it skim? Absolutely. Look, it didn't even come down here, and it skimmed. It went all the way up. But here's what I think is going on, guys. I think that Trump is totally redesigning the economy. Like in 2008, remember that? That was a kind of a total redesign of the economy. Like everything was failing, the housing market was falling, we had delinquencies in mortgages, and like a lot of people lost their homes, and there was a whole realignment, right, of that. Now, it's all different. I don't know, this has been, almost 20 years later. It's all different. Like, I don't think it's the housing market that's causing it. I think it's, well, now we can blame tariffs. You can blame whatever you want. But the fact of the matter is, Trump is trying to give incentives to bring manufacturing back to the United States. So if manufacturing comes back to the United States, like I think he believes, I'm trying to get in his head, and he's actually said a lot of this, then all of a sudden people have jobs. Those people go spend money. That money circulates in the economy. I guess if we're going to still have taxes, then that tax rate continues to, bring money into the government, funds the government. But I think Trump is going to say in the medium term, the government is going to be funded by tariffs, and we're going to pay less taxes. So he's trying to reduce taxes. What happens when you reduce taxes on individuals and corporations? They go out and spend more. They invest more. And so I think that's a total different, kind of a paradigm shift on our economy. I don't know, but I think that's what's going on. And so this is a full realignment. And full realignments are disruptive. And so they're going to disrupt all this tech runs that we've had, and they're going to disrupt manufacturing and home building. And almost every industry is not immune from disruption. And you're seeing that because the markets are tanking 5-6% a day, down basically 20% for the year. Now, if you recall, I make market pulse reports every week to you, and about 1,500 to 2,000 people watch them every week. I don't know if you guys listen to that stuff, but I've been talking about, I haven't had a good feeling about this market for a lot of weeks now. And I think it's been kind of leading up to where we are. So look at this, what's going on now. Now, I want to point out a couple things, okay? By the way, pay attention to some of this stuff, because while history doesn't rhyme or doesn't repeat, it rhymes, or whatever the saying is. And I think we got some rhyming going on. I think this area here is the beginning of what could be happening for the future months of 2025. I don't know. I could be wrong. In fact, I think we are going to get a dead cat bounce this week. We're going to get some kind of buying where people are like, oh, everything's on sale and it went down. But here's the problem with that. This market closed at the bottom of the week, okay? It closed at the bottom of the week on high volume. Look at the volume. The volume is 111% of normal on the SPY. That's pretty significant. Now, let's put a click on here, and I'll show you how far back this week has disrupted and destroyed gains, okay? So we went down to this candle here, and I reported this on my market pulse yesterday. But this candle has a low of 510.27, and this candle has a low of 505.06. This is on 569 million shares, and this is on 410 million shares. So the way I look at this is you either have a ping pong ball or a balloon. And if you drop a ping pong ball or a balloon, it bounces, right? It's light volume, okay? But if you drop a medicine ball or a cinder block, it's going to plow through whatever support that is. Or maybe if that support's weak, it's going to keep going down. That's how I look at this bar, okay? And so look at this bar. It's got way more volume, and it's blown through this candle. That tells me the next candle is in play, which is not that far down, 497. So we might get a little open down on Monday, maybe, I don't know, and then a dead cat bounce. But I can tell you that these candles are not going to hold it. These are weak candles. And if we get any kind of selling on Monday or Tuesday or Wednesday, this candle is in play. Okay? Now, here's the problem with that. This candle is a 487 million share candle. And we just did what? 569 million. So the selling is, if the selling keeps accelerating down to this candle, we're going to have even more selling, right? We're not going to get a bounce. So we have to see what happens when it goes down. But the market's right now at 505. That's all the way down at 414. That's another 10% down, right? If that happens, here's the bottom candle. Here's the capitulation candle that we had at the bottom of 2022, the end of that bear market. We had this little bounce candle where everybody just kind of gave up, and then the stock market went up. Now I want to show you the daily. That's the weekly. The daily it's just totally destroyed. A gap down here on volume. A gap down here yesterday on volume. Look at the closes at the bottom. That tells you the sellers are in charge at the end of the day, which means when the market opens, the sellers are probably going to still be in charge. I don't know, it could be the opposite, but that's generally what I've seen in looking at millions of charts, or hundreds of thousands at least, whatever it is. But look at what this number was, 510. And this is daily now. This is 82 million shares. Look at what it was yesterday. 217 million shares blowing through that candle. Wow. That tells you this thing is going lower, right? And I talk with certainty, but I have no idea. Like, I'm just a bald guy on the internet. But I've looked at a lot of patterns. So I'm trying to warn you. Look at what this looks like. That's, what is that? 50, 60 point down, and 60 points off of this spot here is 510. So we hit that ABC down, but now we are in the Fibonacci extension if you want to go into Fibonacci's. All right. So what can you do? Well, certainly I wouldn't be trying to pick the bottom, because you are not going to pick the bottom. I'm not going to pick the bottom. There's one person that gets to pick the bottom, right? And they're smarter than you and me. Okay, so don't try to be a hero and say, hey, JCPenney's having a sale. I'm going to go buy everything on sale and it's going to bounce up. Yeah, you might get lucky and get a dead cat bounce, but I doubt it, right? There's too much momentum to the downside. Don't forget, Warren Buffett went to a lot of cash a few months ago, so he knew something, okay? Now, what does all that mean? Well, I'm going to give you some short candidates, and I'm just going to kind of whip through them as you look at the charts, okay? I'm going to keep it here on a daily for a minute until I decide not to. But so think about what Trump is doing, right? Look at gas prices and oil prices. They've come down to the lowest prices they've been in 4 years, haven't they? Which is what he said he was going to do, okay? So he said, I'm bringing prices down to the lowest they're going to be, which is what he's done, because we are going into a recessionary environment, which means we're going to be pulling back on growth. Now, I don't know if we're going to get negative growth or we're going to just get slower growth, but I think it takes time to build factories here, right? And so all that growth has to, kind of get built in. The money's not going to be spent right away. It's going to be spent over time. So you got to go find the place to build the factory. You got to line up the contractors, close on it, all that stuff. That takes months. So it's going to be a while for all that manufacturing to kick in. So we're going to be slowing down our growth, I think. His diabolical or his genius move on lower oil prices, which he said, I'm going to lower oil prices. Well, now oil is $62 a barrel, down from 80 something in the last administration just a couple of months ago. And so as oil comes down, think about it. Your apples that get to your grocery store, your oranges that come all the way from California, right? They have to be trucked. Well, all that trucking is going to get cheaper, right? Because oil is getting, diesel's getting cheaper. Your gas prices are getting cheaper. Things are coming down in price because we're recessionary, yes. But because now oil is getting cheaper too. Because we're recessionary, yes. Okay? You see how this is all going to be driving toward a lower priced environment? I'm not saying it's deflationary. I think we're still going to have inflation forever as long as we print money. But the recession is bringing down prices. Okay? But if oil is cheaper, that means oil companies aren't going to be drilling as much. And the oil they are getting out of the ground, they're not going to be making as much money on it. So the oil sector is going to be affected in the short term. Long term, I think the oil sector is going to be great because they're going to be bringing domestic production back to the United States. But short term, who knows? Marathon Petroleum is the chart you're looking at on your screen. Okay? Marathon Petroleum, look at the gap down here, the gap down here, right? Two gap down. It did a little bounce, but look at the high volume bars on that. Okay? I'm going to take this to a weekly. Maybe we'll just look at weeklies. You can see that back in 2020 when we had that COVID scare and oil was basically free, Marathon was 10 times cheaper or 90% cheaper than we are now. So there's a lot of room to the downside to go. Now here's some support here. I think it's heading for that. It's going to test that. But look at the volume is fairly low down here, right? Where you get high volume is somewhere in this area here. I think that's where it's going, is 78 bucks, okay, on Marathon Petroleum. All right, now I'm going to go a little faster. Phillips 66. This is a screen that I have for short candidates, right? So this is telling you that the market is kind of in a red. You know, I believe in market timing. So we're red, that means a lot of stocks are red. And if they're red, then you can maybe, you know, make money on the way down, right? You can short them. You can buy puts on them. You can do all kinds of other strategies on them. So here's Phillips 66. Same kind of deal, but more severe. Now, I don't think I'd short this because this is so far away from these moving averages that it's a bit of a risk. It's a bit of a chase. I'd probably look at doing it right in here. But you could see if I just highlight where these support levels are, and that's low volume support, you got to go back here where there's a high volume support, that's 74. And it's right now at 98. That's 25% off, right? So don't be trying to buy it here thinking it's going to bounce. The propensity is that we're going to be building candles at least all the way down to 78, and then we got to see what happens, right? And this thing could go all the way down, you know, I don't know if it's going to go down to the lows of COVID, you know, 48, 40, but it certainly could come here and test this, 43. The intermediate, to me, on the chart looks like it's right in here, okay? I don't know. But this is certainly, you know, this is not this week that I'm making this decision on, right? This is a death cross that happened here, right? And then it's been trading below its 200-day moving average for months. All right, Nike in big trouble. Why? Because they import from China. And so China's going to get tariffed. And everybody's known it. Look at this chart, right? This is not like a surprise, right? There's a parallel line on that, right? So will it stay in this channel? And by the way, I just kind of drew that channel haphazardly. If I were going to be a little bit more accurate, I'd probably say that's the channel, and we have a breakdown through the channel. But holy moly, look, this thing is testing out the COVID lows right in there. It's 61. It's blown through them. Okay, let's look at the volumes here. High volume candles, 86 million, and the week after that was 94 million. This week, we've got 181 million. To me, Nike's going lower. Nike's going lower. And it's a little bit of a stretch because it's away from that 200-day moving average. You know, when it's near the 200-day moving average, I feel a little bit more confident that it could bounce off of that and I could put the stop in on the other side. Yeah, I guess this is turning into a long video, so sorry about that. But I'm trying to give you some opportunities here. Dell Technologies. I don't know why the stock's going down, but all the tech stocks are going down. If you look at the QQQ, it's getting hammered just like the SPY. It's almost the same chart. But look at Dell. Okay? Now, I don't know why you'd be in the computer business anymore anyway. Everything's commoditized, so you got to sell a lot of volume. But look at this. This was kind of a support line here, and it's right there. Okay? It's right there. Now, that's a high volume at 53 million, and we got 67 million. So I think the bottom of that candle is definitely in play at 54, which is not that far away from where we're going. And this is more of a support line here than anything else, and that's 36. Okay? Okay? So Dell and all the computer companies right now look to be in trouble. Now, there's going to be a day where there's capitulation and everybody that wants to sell has sold, and a bunch of people are going to come in and buy. I'm probably not going to be in on that day. My goal is to get in when I see a bottoming process, not a bottoming day. I don't know what those bottoming days are, and I don't want to catch that falling knife because it gets bloody. Valero, more oil. Look at these oils are starting to look the same, and it blew through this little support level. This level is in play, is where it is now. You know, look at the volume here. The volume on that candle is 21 million. We did 24 million. Not huge, but you know, that's 3 million more than average. So where could it go? I don't know. This looks to me like a decent support level. You know, this is a long way away, guys. Right? This is in the low 60s, and it's 104. That's a 40% drop. You remember the NASDAQ crash in 2000? It was an 80% drop. Right now we're sitting at 20. So there's more to go, I believe. I could be totally wrong, okay? But these stocks are all shaping up. Look at steel. So Trump is trying to impose tariffs to bring back steel to the United States because we only do like 3% of the world's steel now. We used to have 80% of it or something crazy like that. And so we blew that lead. And look at what's going on with steel. It's now breaking down on high volume. Look at all the red weeks that we've had here as it comes down. Now, he's trying to protect steel, okay? But steel has to build factories and foundries and all these things that are expensive. Look how far back the destruction goes. This destruction of price in the last few months has destroyed all the run up that we had from 2020 to 2022. Now you notice in a bear market, this kind of ran up a bit a lot of the time, then we pulled back in the middle of the bear market. But this has been a good performer until now. Now, will it continue? I don't know. It sure seems like it might. These are all my short candidates. ADI looks like it's too far away, but analog devices, they're in semiconductors. Why would semiconductors be going down? I don't know. Texas Instruments, semiconductors, pretty far away from the 200-day moving average. Target, people aren't going to buy as much in a recessionary environment. I've been talking about Target, and they've had some various political things that have gone in their company, and this stock just can't stay above any kind of descending support. And look at where it just came through, right? Now, we had a high volume bar here. It's not quite a swing point, but 61 million, and look what we did. We did 54 million. So we blew through that. That's why I don't like non-swing points. Let's go here to the swing point, which is a low volume swing point. 29 million, 54 million, okay? So these two kind of conflict a little bit, but this, can't argue with this downtrend. How many weeks in a row? 3, 6, 8, 9 weeks in a row. Are you tired of me yet? All right, Lennar Homes. The home builders, why would you want to buy a home when interest rates are 7% and we're tariffing other countries? Now, we have plenty of lumber and all that kind of stuff in our country, but that's going to take time to get the logistics rolling on that. And so the home builders have been selling off. I'm short one. I've got a juicy put going on one of those. I call it a juicy put because it's like covered calls, but the other side of it. And, look at this thing. I mean, this thing was up at 190 and now it's at 111. What's that? 40% drop? Okay. And look, it's going right for this support. It's low volume support. So where's it going? It's probably going right here. That's the first high volume swing point, and that's 21 million. And we did 20 million on Friday. So there's a lot more downside, I think, left to go on home builders. There was a bounce because people think that the Fed is going to lower rates and that's going to help home builders. But these are short-term bounces. I don't think they're sustainable. Okay? Occidental Petroleum. Boom. This one's shortable to me. It's kind of close to the 200-day moving average. And, it wants to go down in here possibly if we have worst-case scenario happening. All right. Danaher. Okay? Medical company. It's had a couple of legs down. You had this leg down. You had this leg down. Goes down to there. Now you got this leg down. Are we, where are we going on this thing? It's right here at this support bottom. Let's take a look at the volume in there. It's 19 million, and this is 22 million. So it's the medicine ball, right? It's probably going down to the next swing point. Where's that? I don't know. It's all the way down here. 34 million shares, and the bottom is 106, and it's at 181. Pretty shortable. NXP, watch this one. Pew! Okay, death cross here, couldn't hold the 200-day moving average, the 40-week support there. We are, breaching this whole area of support in here and probably heading to the bottom of this area. This is low volume, so I don't even care. That's 134. The next support area is right here, 58. That's a long way down from 160. ConocoPhillips. More oil. This is shortable. It's kind of close to the 200-day moving average. United Parcel. If people are buying fewer things, they're moving fewer goods around the country. United Parcel is going to suffer. Look at this crazy downtrend that we've basically had since 2022, which was 230, and now it's at 100. Where's it going? Well, it's not too far down to go down to this COVID low, of 83. I don't know. That looks weak. Agilent Technologies, maybe 2 week. I don't know if I'd short that one. Agilent Technologies. Look at that death cross. These death crosses keep happening a lot on this stock. Look at them. They're just trying to hold the 200-day moving average, and it just can't do it. So it finally capitulated, made a death cross here. And let's see. That's decent volume. 12 million shares, and this is 13 million shares. So we'll see how it shakes up when it goes to that candle. Okay, that's in a weak medical sector. So this, if it breaks this candle, guys, look out below because it's going down to here, I think. Okay, I'll do a few more. FedEx probably going to look just like UPS, except it's more shortable. It just had this death cross. Okay, so take a look at that. It probably wants to go down to this 144 from 210. Okay, and there's a kind of a resistance line right there that, you know, it's even if it were to try to bang up, it's got to break through that and show a lot of strength. Why would anybody buy a company that's going down? It has to show a lot of strength. That's tough. AMAT, semiconductors. Old Dominion, transportation. Caterpillar, I bet this one, I don't think I'd short this one, even though it just had a death cross right there. I don't think so, guys. Like, to me, if you're going to start building factories, you're going to need lots of heavy equipment to do it. So I'm not sure on a secular level or a fundamental level what I would do. More oil here, Constellation Energy, Marvell Technology, which is semiconductors. The semiconductors are just getting hammered. Look at this really abrupt death cross that's happening, right? It couldn't hold the new highs at 120. Look at it, it's already at 49 from 120 like a few weeks ago, like 2 months ago. Are you getting this? Like, it's happening throughout. I can pull up, all the leaders too. I'll pull up the leaders in a second here, right? Let me get to BHP Group. That's more mining, and even though gold is going up and commodities, they're going to come down in price. Gold is just a safe haven for investing. But what about copper? Like, copper is going to come down in price because there's going to be a little bit less building of housing, maybe more in the factories. Dexcom, these are the guys that make that glucose monitoring stuff. This thing, like, death cross happening. Look at this death cross. Of course, it happened because of one day, but that's huge volume, and it blew through that huge volume day. Let's take a look at it. 73 million versus 23 million. So this one may bounce. This one may bounce, actually. So keep an eye on this one. I don't think I would touch this one on a short side, but I wouldn't do any shorts unless you study and do your own homework. FANG, Diamondback Energy. This one's shortable to me, right? This one looks like it could go back in here. Like, right now it blew through all this support in here. Maybe it goes to this low level support area, but I don't think there's anything holding it. Even this is a low level support area. There's just destruction going on all over. Drugs, Merck, boom. Had the death cross. It certainly was right, wasn't it? If you'd have shorted anywhere up in here, it can't even hold its 10-week moving average. Look at it. It's just trying and trying. This is what I call a dreaded H pattern right here, which a dreaded H pattern is like become such a big pattern for me. Whenever you break this support line on the underside of the dreaded H, see the H there? You end up going a lot lower, okay? So this one looks like it's probably heading maybe to there, probably to there, which is not that much lower, but it's 20% lower, 25. All right, DuPont, chemicals. All right, you're getting the concept. There's a lot of shorting opportunities out there. Those are my top 27. I just want to finish up by showing you some of the ones that maybe you're trading, okay? Look at Apple. Does this look familiar? Death cross happening this week, closed at its low, heading for this low right here, which is 164. It's got to hold this. It wanted to hold this week. This was 342 million on that hammer candle there that saved the 10-week moving average. But 289 million versus 342 million. So we may get a little bit of a bounce here. We may get a little bit of a bounce on Apple. I hope so, because I got some Apple. I'm really deep in the money on my calls. So I'm kind of hoping it goes back to 200 and holds there for a while. But if it doesn't, it's got this 164 thing that I just talked about in play. Apple seems, compared to the other ones that are on my short screen, Apple seems okay. What about NVIDIA? Everybody asked me about NVIDIA. Holy moly, NVIDIA. Death cross a couple weeks ago. It's testing this low of 90.69. We had a test there this week. Let's check out the volume. 2 million versus 1.3 billion. Folks, this stock is heading lower. I think it's going into here, which is a low volume swing, and that is 75. This support level seems to me to be kind of where it wants to go. Like that, there's a lot of buying and selling in there, and there's a lot of momentum to the downside. Even Nvidia is tough. Amazon. You think everything's immune? Look at Amazon. It's a retail company. People are going to be buying fewer things, so Amazon's going down. I think it's going to tag this low point of 150, 161. Right? We'll see how it does, but it's got a ways to go to tag that. So Amazon doesn't look that bad compared to the other ones right now. Right? Microsoft. I just think Microsoft is in just a slow meltdown. I don't know. It just seems that since it crossed its 200-day moving average, like, why would it bounce up? Azure, okay. Copilot, which is free. Teams, if in a recessionary environment, people are going to get laid off, less teams. Like, why would Microsoft go up? OpenAI, well, they've announced that they're closing the factories that they were going to, or the data storage centers that they were going to be putting in. Well, that'll save them some money, which is good. But on the other side, that means their investment in OpenAI, they're not so confident in it, even though it's amazing. And it's getting commoditized, all that AI stuff. So Microsoft, I don't know, that doesn't look too good to me either. How about this one? Google. Woof. 10 weeks in a row of down. I guess one little aberrative, high volume candle in there that couldn't hold the 200-day moving average with a death cross. Like, why would you buy Google, by the way? Like, do you search for stuff? I don't search anymore, right? I use ChatGPT and I use some other AI, and I ask it questions and it gives me the answer. I don't have to go to a website and search and read, which means if I'm not doing that, and I'm usually early on stuff, then that means companies aren't going to be advertising because people aren't going to be Googling things as much. There's a decline in Googling, okay? That's coming if it's not here yet. It's here for me. So if you're Googling less, that means people are advertising less. That's their main business model. Yeah, they got a bunch of moonshots going on too, but like that chart not lying, right? That chart's telling me this thing wants to go lower. It's got a little head and shoulders thing going on here. You get the picture, right? So what am I doing with all this stuff? Well, I'm not saying you go out and short. I'm not saying I'm going to go out and short. I probably am. I've got a few short positions called juicy puts on a home builder called D.R. Horton. I've got a juicy put, which basically is a covered call to the downside, where I'm just trying to make the juice. So I want the companies to be going lower, and I think we have that environment. I've got one on Best Buy. Why would you go to the store and buy Chinese goods, TVs and tablets and all that stuff, when there's going to be tariffs put on them? So a few weeks ago, I entered into a downside trade. It's been working out great. I've got a little bit of Apple deep in the money calls to bring me in some juice, some income while I wait for the stock to maybe bottom. But I don't know how patient I'm going to be. If this environment is, if what I think is happening, which is we are at the beginning of a sell-off, not the end. I don't think we really realize how big of a sell-off we're in compared to, if you compare to 2008, 2007, I think we're at the beginning. And the beginning means that we could last for months. If we last for months, we're going to get, like you notice that even when we get, I'll go back to 2012 chart, right? On the SPY. Notice how in this period of time in 2007 and 2008, it went down severely from let's see when the death cross was. It was at 149 and it went all the way down to 67. So more than 50%. We're at 20% now. But notice it went down a lot on the death cross and then it bounced and tried to find some support, right? Maybe in here. It went all the way back to the 200-day moving average and couldn't hold it. And so it made another little leg down and then it tried to find support. This is the way that markets build over time, right? Find a little consolidation in there on the way down. And then it went all the way. This is a huge leg. And then it found a little bit of support in there. And then we went down again and we capitulated. So it took all of these months of selling, which was what? From 2000, let's go a couple weeks after the death cross. The beginning of 08 all the way to March of 09. Okay? So that took 13, 14 months for us to bottom. And all those periods of time, there were these little stair steps down. You go up a little bit, you come down more. You go down a little bit, you come up a little bit. You go down. Finally, you make a bottom when people are just, I can't take it anymore. That's called capitulation. So all the sellers are gone. The smart money is all buying right in here at the bottom, and they ran it up. I mean, if I pull this to 2015, you're going to feel mad at yourself that you didn't own some of that, right? This is March of 09, and it was at 70, and it tripled, in 6 years. Now, I'm not saying we're going to try to catch the bottom. I'm not saying we're going to try to catch the tops. We don't. But we try to find those little spots. I think we're at the beginning. I'm trying to warn you here. So I've made this 35-minute video because I see there's a lot of opportunities to the downside. And even some of the good stocks, Apple, Nvidia, Google, Amazon, the ones that the Mag 7 they're called, right? They're not even going up. Now, will they? Maybe. But they're not going up. The probabilities are to the downside of this market. This is why I use market timing. And my market timing system is right 75, 80% of the time. It's not right all the time. There's nothing I do that's right all the time, right? So don't listen to me, but learn, right? I've been doing this for a lot of years. I've been looking at hundreds of thousands, if not millions of charts. And when you look at millions of charts, the patterns start to jump out at you. So there's lots of patterns out there. And I'm seeing them. And I'm trying to get you to see them. So I hope this has been helpful. If it has, make a comment of what you thought was most helpful. Okay? Don't make comments about, oh, you picked the bot, this didn't age well. Don't make stupid comments like that. Okay? A lot of people make stupid comments like, I'm not trying to predict things. I'm trying to show you that there are patterns that repeat. And when they repeat, if you get in early enough, you can either avoid pain or you can actually make some money on it. So if you're going to make a comment, please, and I love comments. I answer like almost every single comment unless you make stupid comments, like unconstructive comments. We're all trying to learn. I'm trying to learn too. So if you could teach me something in the comments, but don't troll me and make stupid comments, okay? Because I'll just boot you from the channel. And then you don't get to make any more comments. So make constructive comments because I love them. I can learn from them. If I can do something better, make a comment. If you could share this with somebody that you think is in the market that can use it. If you like the way I, break the charts down, share it. Subscribe to my channel if you haven't. Suggest that somebody else subscribe. I'm trying to get the word out on this stuff. Because these charts, I'm telling you, there's some predictability in some of these charts. Markets have symmetry. They remember the past. They go back to these bounce points. And let me just finalize by saying this. We're going to get some bounces. I showed you there's nothing that goes straight up and nothing that goes straight down. I think we have a probability right now for straight down. I'll let you know if it goes the other way. I can be wrong. But right now, the market momentum is in favor of the medicine ball coming down the hill, right? Not the ping pong ball. There's a lot of volume. And at some point, it gets capitulated and there's a bounce. And then people will be like, yeah, see, the bald guy said we were going down and now we bounced. Yeah. There's going to be a bounce, and that might be a shortable bounce. You got to check out the volume. All right, so that's a long period of time that if you're still here, there's crickets going on out there, but if you're still here, thank you. Glad, and I'm hoping this is helping. And, we got lots of stuff on this channel, by the way. I'll just give a quick shout out to what we do here. We try to buy good stocks in uptrending markets and sell calls against them, and that creates income. In downtrending markets, we try to stay deep in the money and create income from them. And yeah, you'll probably comment and say, well, why not just buy puts? Absolutely. I'm sorry, short puts. You can short puts. I just don't like to short puts because if I end up shorting a put on a stock, let's say 2 weeks ago, when Apple was here at 225, I shorted a put at 200. Well, the stock is at 188 now. So I end up owning the stock at 200 and it's down 12 bucks. And that may not be the time to own it. So I like shorting puts. I just don't do it much. What I'm doing now is I'm doing what I call juicy puts. And these are puts that create income as the stock continues to go down. It's a bit experimental on my part because I haven't done these a huge amount. But I'm taking my whole cash flow machine methodology and I'm applying it to the downside. So I think there's some opportunity there. I'll keep you posted. And that's what we do here. And, we're not trying to predict, buying a stock at the bottom and holding it all the way to the top. That's not how we do this. But there are some opportunities on the short side that, using this juicy put methodology that I'm working on, you could make some money to the short side. Or you could just be in cash and watch everybody just freak out, which is probably not a smart move either, or not a stupid move either. So I'll leave you with this. It's better to be out of the market wishing you were in than in the market wishing you were out, right? So don't be trying to jump in and catch the falling knife right now when stocks are probabilistically moving to the downside. That's I think where we're going in the next few months. Could be wrong, but the charts are telling me that I may not be wrong, unfortunately. So we're in for a little bit more pain, I think, over time. I hope this has been helpful, and I'll see you on the next video. Take care. Bye. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below, and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.